Today on the Ask BP podcast, we're going to talk about how do I invest $1 million?
You're listening to another BiggerPockets Ask BP podcast, where you'll hear short, direct answers to your biggest real estate questions. Submit your question today on Facebook, Twitter, or the BiggerPockets forums by using hashtag AskBP. And don't forget to pick up your copy of the Ultimate Beginner's Guide to Real Estate Investing and other great content when you sign up for your free account at BiggerPockets.com. With that, let's get to the show.
What is going on, everyone? My name is Brandon here with the Ask BP podcast, and today we're going to talk about investing large sums of money, because not everybody that listens to this podcast are broke or, limited in funds. Some people actually have a good deal of money that they want to invest and get working for them to get a good return on investment. So what about those people? Let's talk about that today. Now, that is not me. I don't have $1 million sitting around. However, Anonymous in New York, they didn't want their name said this. My partner and I have $1 million plus to invest in the Metro, New York, and Long Island area. Would you recommend buying 1 to 2 triplexes or a quadplex, or spread the money out over several different properties? What would you do? So today I want to talk about that. It's kind of a fun thought. I remember back in middle school or elementary school or whatever, our teacher had a task for us one day. Like, one of our jobs was to spend $1 million. And so we had to go take newspaper ads and everything else, and we had to spend exactly $1 million. And that was my favorite activity I did when I was growing up, because it was so much fun to spend that. So today I get to do that, at least in terms of investment. So let's go spend $1 million together, shall we? First of all, I want to say this. I've said this before, I'll say it again. When you have money to invest in real estate, you are carrying around a loaded shotgun. And if you don't know how to use it right, you'll end up blowing some poor guy's head off. We don't want to do that. And so the first thing I'd say is be very careful. Understand that just because you have money, because you earned it in a business or you inherited it or whatever, it doesn't mean that you're going to be good at real estate investing with it. You still got to learn just like all of the rest of us do. So be very careful, learn, or you could lose that money very easily. It's probably easier to lose money in real estate than it is in a lot of other investments, because you're the one responsible. If you go make a bad purchase, you can lose all your money because you were stupid. So hopefully, you'll go do your homework. So that's the first thing I'd say, is to do that. Secondly, understand that if you want to invest in the New York market, and this will apply to anybody, whether you're in, LA or Denver or, Seattle, whatever, like a major U.S. market that has high appreciating prices, high prices that are maybe not so cash flow helpful or conducive. It's a different market than what I'm dealing with. I deal with houses in the $50,000 range. You're going to be dealing with houses in the $500,000 range or higher. And so it's a little bit different strategy. Now, typically on the expensive properties, it might be hard to find cash flow. I'm not saying impossible. You can probably do it because there's maybe less turnover, or maybe you get higher quality tenants who stay longer at a nicer property in a bigger area. Just generally speaking, it can be a little harder to find good cash flow. So make sure if you are trying to invest for cash flow, you actually get cash flow. And so run the numbers very carefully. I'd recommend using the BiggerPockets rental property calculator. You can get to it at biggerpockets.com/calc. Running all the numbers through deals, see what it comes out with. Do you really get a good return on investment at the end of doing that deal, or does it actually not look that good? So make sure you do the numbers very carefully if that's what you're shooting for. Now, if you're not shooting for cash flow, if you are trying to play the appreciation game, let's talk about that for a minute. The appreciation game is basically you buy a property, and the only way you're going to make a good return on your money is if that property climbs in value. Now, typically, hot markets or big markets tend to climb better than smaller, more rural markets. And so you're in one of those markets that's probably a little bit bigger, a little bit more aggressive for appreciation. So maybe that is the role you want to take in your business, and you want to bring the appreciation game to the table, and that's fine. I mean, I understand people do that. I will advise this. Never buy a bad deal hoping appreciation will bail you out. Terrible idea 100% of the time. Yes, you could win big, but you could also win big if you go to Vegas and throw it all on black and hope to get it that way as well. I mean, there's winners and there's losers and everything. But when you bet on appreciation, you buy a bad deal just hoping that it'll appreciate and maybe it'll pay off. I just think it's a dangerous pattern to get into. Eventually you will lose. Just like playing blackjack, you might win 10 hands in a row, but if you just keep betting more and more and you lose, you could lose lose it all, right? So understand that if you're going to invest for appreciation, it doesn't mean you should buy a bad deal. Look for something that at least provides some cash flow, and then maybe analyze, with a little bit of appreciation in there and see how it turns out. Again, I wouldn't assume, look back on the last 50 years of appreciation. What's it been doing? What's the average been? Now, again, the past doesn't say anything about the future, but if you want a good number to use, maybe use that, maybe be a little more conservative. Typically when I look at appreciation, I factor in, if at all, I usually don't even use it, but if I do factor in appreciation, I'll put about maybe 2%, thinking inflation's usually been around 2% or so, somewhere around there. So I just make sure you probably do that. So again, I generally am a cash flow investor. I'm not much of an appreciation one, but if you want to invest in appreciation, you could. Now, again, you don't have to. If you have $1 million to invest in real estate, you could maybe do some appreciation, some cash flow, maybe a little mixture of both. Maybe try to invest out of the area a little further. An hour or two outside the city, you get a lot more cash flow. Or maybe you'll find an incredible cash flow deal right in the city. I'm not saying you can't. I'm just saying it can be a little bit difficult. You're saying Long Island, which I know is not as bad as like Manhattan and that kind of thing. So now your final question is, what should you buy? Should you buy like a single property and just use the whole $1 million to buy one big property? Or should you, spread that out? So I talked about that on a recent episode here of the Ask BP podcast. I think it was episode 27. If you want to watch that, just go to biggerpockets.com/askbp027. AskBP027, and you can hear all my thoughts on, should you put a down payment or pay all cash. But just to kind of summarize what I talked about is it's really up to you. The more you put down, typically the lower return on investment you're going to get, but there's less agendas on the table, and so you get a little more freedom and less could go wrong. So you might get a lower return, but have a little bit more freedom, a little less risk. So, I personally, what I would probably do is I would put down enough to get cash flow, to get good cash flow, and then I'd hope that appreciation gave me the rest of the way there. And so at the end of the day, after 10 years, I could average out that my IRR, my internal rate of return, would be like 15%. That's probably what I would do if I was going to do that. I'd look for something that could get both a little cash flow and a little appreciation that together would give me a good return on investment. Either that, you could take the $1 million and, lend it out as a private lender or a hard money lender. You could probably earn 12, 13, 14, 15% over time as a private lender or a hard money lender. You could partner with somebody out of the area or in the area. You could combine the money with crowdfunding. I mean, there's a lot of options you have at this point. But again, just to wrap up my discussion with where I started, just be careful. When you're going to go out and invest $1 million, just be careful that you don't lose it, that you don't do something stupid. And luckily, you are here on BiggerPockets and you're learning and you're growing and you probably know a lot more than I do already about investments because you made $1 million and that's awesome. So I guess that's my encouragement to people out there who have money to invest is great. Keep learning, keep growing just like the rest of us. And you'll do great. So let's get out of here. Today, I want to read our action quote of the day. And today's action quote, or our quote of the day, is Thomas Edison said, "The successful person has the habit of doing the things failures don't like to do." And so are you a failure or are you a successful person? Because if you're a successful person, you're going to have to do all those things that the other people won't do. So what is it you're going to do? I don't know, probably go out and take some action, right? Which leads me to my final, how we'll get out of here today is the same way I end every show, is just to let you know, in your pursuit of your goals and your dreams, don't just learn, but take action. Get out there and take some action. For the Ask BP podcast, my name is Brandon, signing off.
You've just heard another episode of the BiggerPockets Ask BP podcast. Submit your question today on Facebook, Twitter, or the BiggerPockets forum by using hashtag AskBP. And for more incredible real estate investing tools and education, including a free download of our book, The Ultimate Beginner's Guide to Real Estate Investing, head over to BiggerPockets.com and sign up for your free account today. We'll see you on the next show.